I believe that we'd all agree that we're living in a very challenging, unpredictable, and turbulent economic environment. We're at a point in time where things are getting much more expensive due to inflation. The instability of the US dollar and the uncertainty of our political environment has further complicated an already difficult financial situation. As this situation continues to worsen, it becomes crucial for all of us alike to explore innovative ways to navigate these economic challenges. The key to building, protecting, and preserving your investments is diversification. In today's world, it is now imperative to consider alternative currencies and assets that have shown resilience during economic uncertainty. These would include precious metals and cryptocurrencies. Both are amazing hedges against inflation and need to become an integral part of your financial planning. Whether you're ready or not, the world has already entered an age of digital finance. Unlike traditional investments, cryptocurrencies operate on decentralized blockchain networks, providing a level of transparency, security, speed, and convenience not typically found in traditional financial systems. Integrating cryptocurrencies into financial planning involves understanding the risks and rewards, staying informed about market trends, and considering the long-term potential of these assets. Cryptoadvantage is an educational platform dedicated to providing you with the tools and knowledge necessary to understand and succeed in the world of cryptocurrency. Whether you're a beginner or an experienced investor, our courses cater to all levels of expertise. You'll find our program to be informative, entertaining, and very easy to understand. CryptoAdvantage will provide you with the comprehensive, step-by-step guide and the necessary building blocks to understand how to navigate the crypto world with confidence. As you can now see, the era of digital finance is here, bringing forth challenges and opportunities. As you continue to build your cryptocurrency assets, your investment portfolio will benefit through true diversification. Embracing this transformation and building your knowledge of digital assets is the ultimate path to personal independence and financial freedom. So, if you're looking for a way to transition to this revolutionary age of digital finance, you found it. Welcome to the winning team.
What is up, champs? Welcome to Crypto Conquest Episode 2 Ethereum Explosion. If you've been paying attention to the markets, you will see that in the past week, Bitcoin has skyrocketed once again, followed by Ethereum and then the rest of the altcoins as well. Overall, great recovery. We're fucking back, baby.
Let's go,
Let's
baby.
go. See what we got coming up first. So, a lot of people very interested in Bitcoin, and it can make you a lot of money, but it's also very important to understand the history of Bitcoin, how it was created, why it was created, and how does this affect us today. So, shown here, we have a nice little timeline of Bitcoin, and it began in 2008 when the whole 2008 scare happened, and it caused a huge panic, and as a result, Satoshi Nakamoto publishes Bitcoin white paper. Chris, can you explain to us what the whole 2008 crash was all about?
Right, yeah. So, back in 2008, the whole global recession, we had a big kind of a housing bubble, the Lehman Brothers, other big companies all collapse and go damn near bankrupt. This brought on a global recession that rippled across the entire world, really. And this made this people pretty much lose faith in the banking system, the US dollar, and our dear friend Satoshi Nakamoto. He came out with the Bitcoin white paper, and soon after he mined the first block himself.
So this Satoshi Nakamoto, obviously, protect himself, he remains completely anonymous. He just has a face name of Satoshi Nakamoto. And this guy's an absolute genius because, as Chris just said, there's a huge collapse with the traditional finance system. And what does this guy do? He creates his own digital currency. And the beauty of it is, it's not owned by a singular entity. It is owned by all of the computers that mine Bitcoin.
The miners, the community.
And that's the beauty of cryptocurrency. And then shuffle down, 2009, the Bitcoin is actually created. The first blockchain was also launched in 2009. 2010, we have our very first real life transaction with Bitcoin. And the funny thing is, 2 days ago, we have Bitcoin Pizza Day. The whole story behind Bitcoin Pizza Day was Laszlo Haniek actually was the first person to use a real transaction using cryptocurrency. He bought he bought 2 large pizzas with 10,000 Bitcoin from Papa John's. Incredible.
How much is that worth today?
Today, around $700 million. But back then, worth nearly nothing. But the beauty is, the reason why Laszlo Haniek is so important is because he was an early innovator of crypto adoption. This guy has a background in software development. He knew that this was going to be huge. So what does he do? He goes and offers Papa John's 10,000 Bitcoin. He got 2 large pizzas out of it. But it's awesome. Now we have an international holiday, Bitcoin Pizza Day, which us two celebrated Italian style. Fast forward, in 2011, the Bitcoin price surpasses $1. Huge. And then you fast forward to 2021, the value of all cryptocurrency in existence hit $3 trillion. So huge, huge explosion in the adoption and the price of Bitcoin. Then in 2022, the size of Bitcoin blockchain hits 415 gigabytes. Absolutely enormous. So now that you guys know the history of Bitcoin, I have a couple of interesting statistics to share. Why is Bitcoin going to grow? A lot of people wonder, oh, it's already got its hype. It's pretty much over. Well, those people couldn't be more far from the truth. As you can see here, an estimated 1 billion people around the world use cryptocurrencies. Compare that to the global population of 8 billion. That is 12.5% of the population that use cryptocurrency. Why is that important? 12.5% of the population. That is a minuscule number in the adoption cycle to when we eventually fast forward to 10, 20 years from now, we'll have close to 90% utilization. We are still in the early stages. This is incredible.
And what happens when more people adopt cryptocurrency?
Explosion. Absolutely enormous. Another interesting statistic, despite Bitcoin's growing recognition, around 69% of Americans claim to not understand cryptocurrency. Well, what happens when they actually understand it? They're going to start investing in it because they realize how important it is to our financial freedom and success. It's a wealth creation method, and it's a store of value, and it has tons of utility. So it's just going to keep going up from here. It's going to create more demand, which is going to make Bitcoin, Ethereum, etc. more scarce, hence rising in value.
Supply and demand, guys. Supply and demand.
All right. Let's see if I can find it. Nope. Nope. Lost my charts here. Oh, here we go. All right. Important demographics to note about cryptocurrency. 69% of the US adult population is white, 16% Hispanic, 10% African American, and 5% Asian. When you compare it to the percent of total crypto ownership, now you have an index. White is under indexing, Hispanic over indexing like crazy. Shout out to the Hispanic community. This is absolutely amazing. African American, slightly under indexing, and Asian, slightly over indexing. That is amazing. Now, when we look at the generations, 11% of the US population, Gen Z, 30% millennials, Gen X 27%, and baby boomers 32%. Comparing the index, Gen Z is over indexing, which is kind of a surprise because when you look at the date ranges, approximately half of Gen Z is still underage, so they don't count towards the percent of US adult population. So shout out to Gen Z, doing phenomenal. Millennials, absolutely crushing out of the ballpark here. They're smoking the rest of the generations at 57% of the total crypto ownership. Huge shout out to the millennials. Gen X, 20%, so they're under indexing. And the baby boomers, under indexing at 10%. But that is pretty normal due to the fact that it takes a little bit longer for the psychology of the older crowd to adopt a new technology. But Gen Z, Gen X, baby boomers, keep buying. You're in strict competition with the millennials right now. Keep on buying. You need to crush it, guys. But why are these so important? Well, let's take a look at the innovation adoption life cycle. Chris, can you explain what this is?
Right. So this is a curve that shows the stages of a brand new technology being adopted by the people. Now, let's take cell phones for an example. When cell phones were first released to the world, the innovators, which we have at 2.5%, the small, very first people, they are the ones that started using the cell phone. Now, think these big, blocky things, very uncomfortable to move around. These are the first people that decided to start using the cell phones because they see what it can become.
The G's of society.
Fast forward to the early adopters at 13.5%. These guys, they start to see the potential of it as it starts to expand. Maybe the cell phones get a little smaller. Maybe we start going over to the smartphone realm where you can see there's even more things being added, more utility. That brings us to early majority. When these things, maybe you have iPhone 3, iPhone 5, they start becoming more practical. All the bugs, all the issues were kind of fixed up, and they are a lot easier to use nowadays. And then we have the late majority. Now, as life changes, maybe your job adopts cell phones, you need to be able to call and text and do all this stuff just to stay quick as the job requires you to. The older crowd, these people that were kind of pushing back the change, they're kind of forced to get into it. And then we have the laggards. These people will resist change no matter what. They hate when their old style of life gets disrupted, essentially. Think your grandma. Does your grandma use a cell phone? Most likely not.
Ours doesn't. Nope. Beautiful. So you can see here, you have the 2.5% innovators, 13.5% early adopters, 34% early majority, another 34% for the late majority, 16% laggards. This is the division of the population. Now, to put it in even greater perspective, we have an S curve. Now, as you can see on the bottom, think of it as a timeline. So the very beginning will be the moment this technology is released. The very end will be years, decades in the future. Now, if you pay attention,
We're talking like 15, 20, maybe even 25 years. I mean, think about the cell phone today.
it always varies based on the type of technology, but it's always far out in the future. But as you can see here on the y-axis, you have total percent adoption. The reason it is an S curve is because it starts off very slowly. It takes a lot of time to accumulate attention. But once you hit that early adopter section, now you have approximately 15% of the globe on the wave. Now, because everybody's seeing this, it's raising eyebrows and attention. So you look over, and now they want to become part of the train. So now it exponentially just takes off, skyrockets, but it's not sustainable forever. It has to top out eventually. So once we hit the late majority, then it hits a pivot point and it starts to slow off till eventually all the laggers hop on and we reach 100% or close to 100% adoption. So where are we right now at this point in time on this adoption curve when it comes to crypto?
Right. So right now, we are at the early adopters with that 12.5%, correct?
Yep.
Yep. Right about right there. Now, think about when we hit the early majority, the late majority. The rate of adoption is going to go absolutely parabolic. Excuse me. This coincides with bull markets when a bunch of people see the hype. They see the advertisements. They see the news headlines. They want to get in on this. They start adopting and they start winning.
Think about all the growth that you can see from, oops, can't highlight there, from right at this point in time all the way over to the laggards. Look at that amount of growth and put it in a global perspective. Billions and billions of people, which all have money.
And you know what happens with growth.
Lots of money to be made, lots of wealth stored right here. Do you want to be that person that sees this right now and thinks, oh, maybe I'll get to it eventually. Oh, it's pretty cool. I'll take a look later. Or do you want to be the guy that's going to get in right now and ride the adoption curve to make loads and loads of money?
Guys, money favors speed. You're not going to make any money by sitting and watching. You need to figure this out right now.
Because say you wait 5, 10 years in the future, you're going to sit back and think, man, I really should have gotten into it. A lot of people, they want to get in, but they have certain something holding them back. Do it now. Be an early adopter. Get in and ride the wave. Watch the gains flow into your wallet.
Now, you don't want to be a laggard, do you?
I sure as hell don't want to be a laggard. But for those who want to get started, but don't know how to get started, we are hosting a live webinar. This will teach you exactly how to get started if you're a beginner. It'll teach you what exchanges to get on, what wallets, how to buy your first crypto. We are hosting it Tuesday, May 28th at 6 p.m. Eastern Time. DM us on Instagram at cryptoadvantage_, and we will reserve your spot. We are only holding 15 spots available, so you need to act fast. This is free, guys. Absolutely free. So you need to act now. Don't miss this opportunity. I expect within the next 10 minutes for my phone to be blowing up with DMs. And say you are unavailable during that time, shoot us a DM and we'll figure out a makeup call. Moving forward,
DM us at cryptoadvantage _ on Instagram.
do it. All right.
Link in the description.
Yes, sir. Moving forward. Here we have the market cycle stages. Chris, you want to tear this chart apart and explain what's going on
Right.
here?
So this is a chart brought to us by Wall Street, the Wall Street cheat sheet. And this is basically the macro cycle of the bull run of any asset, really. Now, in red, you're going to see the bull market, where I'm sure you guys know all too well. This is where prices were at an all-time low, nothing's going on. And then we see hope. A recovery rally. Is it possible? Keeps on going up. Optimism hits. The rally is real, guys. Let's go. We are about at the optimism point right now. Now, if you didn't buy in the red zone, optimism is going to be where you're going to want to get in. Now, I don't want you guys to be buying up at the euphoria stage. It's headlines everywhere. Everyone sees, oh, Bitcoin's at 100K, it's at 200K. It's going to keep on going forever, guys. Buy now. I do not want you to be that guy. Don't go on margin. Don't borrow. Don't do all this stuff at the top. Do not be exit liquidity for everyone that bought down in the red part.
You're going to get wrecked, and hedge funds are just going to steal your money. So let's not do that.
Once we're at the euphoria stage, you guys should actually be scaling out. You should be dollar cost average selling to get a decent average exit point. You do not want to lose all your money.
Limit your risk.
And as soon as we get over to the complacency, the average person thinking, oh, let's just let it cool off. The next rally is coming, right? You need to be careful. At complacency, you should be pretty much out and even looking at shorting. Shorting being where you bet on the market going down. Yes, you can actually make money when the market is falling.
There's always a way to make money. You just got to
Always.
discover it. But yeah, quick recap. We are right below the optimism stage. As you can see on the price chart. I mean, this isn't anything new. This has been the same cycle that we've been repeating for years. Our economic cycles always follow the traditional sine curve and they keep repeating itself. History always repeats itself. I'm sure Mrs. Smith in history class has hammered that into your mind already. Sure as hell happened to me.
Can you zoom in on that top right?
Absolutely.
Yeah. So, as you can see, this takes our normal price chart and puts it into a nice little sine curve for us. Now, if you buy at euphoria, that is maximum financial risk. If you hold assets up there, you have much more to lose. Down at after contraction happens at the red zone, that is maximum opportunity. If you are accumulating at that bottom part, you have the maximum upside. The sky is the limit at that point. And then the recovery happens, prosperity. We went over all that stuff.
Yes, guys, I am drinking Starbucks coffee. I woke up, I was feeling a little white today. So, before you start slandering me in the comments. All right, moving forward. So we take a look at the top crypto news.
Let's show it.
A sad incident has occurred today. Kabosu, the dog that you see on Dogecoin, unfortunately, he has passed away today. So, a quick moment of silence for Kabosu. Kabosu will forever be missed. He always has a special place in our hearts, especially Elon.
You will always be a legend.
Moving forward. Roaring Kitty. Roaring Kitty. This guy is a G. What did he do? He posted, if it'll load, he posted this picture on Twitter on May 12th. And for those who don't understand the context, a couple years ago, back in 2021, he sent out a tweet urging people to buy GameStop stock. Everybody, I mean everybody, started buying in, kept buying, would not sell. And what did this do to the massive hedge funds? They were shorting because they expect people to pull out their money because tough times are coming. And what are they doing? They're selling off. So what does the hedge fund do? Just gonna keep racking up the money. But what does Roaring Kitty do? Roaring Kitty gathers the crowd, the power of the people. And what does he do? Hits the buy button. Everybody's buying GameStop. Stock is going absolutely crazy. And he single-handedly, with the power of his army, destroyed hedge funds. Put them out billions of dollars. This guy is a true G. So, the reason why this is important. Hedge funds. They are betting on the market going down via shorting. What is shorting? Chris, would you like to take it away?
Yes. So, short selling. This is when you bet on the market going down. Hedge funds, they had copious amounts of money, and they shorted GameStop, betting that it was going to crash. They were going to take it all this money. Now, in a short, what you do as a short seller is you borrow, in this case, shares of GameStop. Then immediately the system sells and you get the cash out of those borrowed assets. Then, when the asset goes down, you buy back at that lower price. And then you take and you return the shares and you repay the debt. Now, what this does is you had the cash all the way up here. So, say your stock's worth $500, and then you buy back, you only pay $400. You get to keep that $100. And that is essentially how you make money as the market goes down.
Quick tip for when the bear market ends up becoming a thing again.
Yep, right at that complacency stage. Don't miss it. Don't be that guy that bag holds all the way down through anxiety, denial, panic, anger, depression. Don't be depressed. Don't lose all. Don't like. I don't want you to lose all your gains, but don't put your entire paycheck at the top and then lose your paycheck as well. You don't want to be the guy that says, I'm 100% out of the markets. I can't afford to lose more. I don't want any of my fans saying that.
Knowledge is power. Understand the cycle and learn how to take advantage of the system. See, if you're hodling, you're going to lose all your money. However, if you take advantage of the system via short selling, you can actually turn an economic recession into something that's profitable.
Imagine taking all those gains, using it to short, and then proceed to get all those earnings as it comes down, only to reinvest at that red zone and wait for the next pump.
G.
What a G.
Always will be a G. Australian CBDCs. We have a short clip for you. Watch it, understand it.
This is coming to the rest of the world very soon. One of Australia's biggest banks told all its clients that they're soon going to only be allowing digital transactions. No more cash will be accepted. The World Economic Forum has an entire article about the benefits of a cashless society and how much of a success it's been in China. They're urging all nations to begin the, quote, cash revolution. The next phase is the US. Already many big banks are saying the dollar is about to collapse, which is going to make way for a central bank digital currency. The plan isn't to benefit us. The plan is to control every aspect of our lives.
Guys, CBDCs, coins issued by the central bank, they are designed for control.
Absolutely disgusting. So, Australia, they're launching their CBDCs. Now they want the rest of the world to have CBDCs. As you saw in the video, the WEF, World Economic Forum, released this article a few years back, Benefits of a Cashless Society. This is where you absolutely destroy fiat dollar where it is paper cash. They say a tool to fight corruption. Now, they're using a Trojan horse here. They're saying we need CBDCs because there's so much crime, there's money laundering, all this stuff, funding corruption. What corruption are you fighting with a CBDC? If there's corruption in a government, then the government is going to use their own CBDC to corrupt.
Question is, how is a CBDC going to fight corruption?
It doesn't. So, for those that just blindly read the article and believe everything that the ones in control say, they're not going to understand. But once you actually sit down, read it, and kind of think about it through your head, you're going to realize that CBDCs are inherently bad. They're Trojan horsing to make it look like it is actually very important for society, but in reality, they're using a digital currency to absolutely control every aspect of your life.
Keep in mind, with a CBDC, the government can see every single transaction, who holds it, and they can even control the money. If your wallet is buying stuff they don't like, they can lock your wallet, they can limit the amount you can hold, and they could even auto tax you, really. They could take money right out of your holdings. Ultimate control of your money. Bitcoin, on the other hand, it's a complete opposite. You have control over the Bitcoin in your wallet. You can't impose a tax on your wallet. You could buy whatever you want, and there's no one looking over your shoulder and basically controlling everything you do.
Imagine you switch over to CBDC and, oh, you didn't fully comply with the harsh demands that they placed. Why did they place these harsh demands? Because they have the absolute power. They could do whatever they want with this system. Once they control the CBDC, what do? They could just shut off your wallet. Oh, what happens if you need groceries and you're hungry? With CBDCs, sorry, you're going to keep going hungry. Let's say you have an electric car. Oh, act up? We'll just turn that off. No big deal. They could also place a carbon tax on you. They can also place a meat consumption tax. This is all stuff that they're doing right now, right in front of us. They are saying it on podcasts. They are writing articles about it, and they are trying their absolute hardest to do an easy shift into CBDCs. They're not going to do it immediately because it is when you make an abrupt change, obviously there's going to be tons of resistance and nobody's going to be used to the change. So what do? They slowly put hints and hints of the change in there. So over time, you just become used to the change. And when they switch over, how are they going to switch over to CBDC? Oh, let's collapse the system that is currently holding us together. The US dollar, we've been saying this, it is going to eventually collapse. And we have the proof right here. They need a new financial system where they can have complete control and where they can try to compete against cryptocurrency. But the more people are awake, the less effective it's going to be.
What happens when your entire paycheck is in CBDC? What happens when your retirement fund automatically goes into CBDC? They're going to try and force it on you. But if you don't understand the world of crypto, you're going to be completely blindsided when this happens.
The whole reason behind why Satoshi Nakamoto created Bitcoin to begin with, it is for power of the people, is to prevent a huge 2008 corrupt recession from happening. So prepare for the future when they do end up collapsing this US dollar. And screw the mattress, or excuse me, screw the cash under the mattress. It's going to be worth nothing eventually.
2008 was just an abuse of power. Now think of that at a larger scale. It's scary if you ask me.
It could very well become the next Great Depression. And then what's going to happen? Introduce CBDCs to the public. Woo! We have a way out. This is the solution. They're going to try to get everybody to rush over to CBDCs, and boom, shackles. It's ridiculous. Have ourselves another geek, Klaus Schwab. All right.
Be aware of the World Economic Forum's agenda. Klaus has very dystopian plans set for all of us. Be aware, and again, do not be blindsided by this.
I encourage everyone to, whenever they have some spare time, do the research on the WEF, what they do, their whole plan for CBDC. It's out there. It's right out in the open. They're not hiding it.
They live stream their Davos meetings. It's all right there.
So it's very important. I can't stress it enough. It's very important to research this topic. We will be introducing more information about this in further podcasts. But enough of this treachery. Let's move over to something that is much better. Let's look at the bright side. Seems to be a technical issue. Let me fix that real quick. We're missing half our article here. In the meantime, explain how awful Klaus Schwab is.
Klaus Schwab. This is the guy that wants all of you to eat bugs. They are trying to basically change the world by they set this magical date of 2030 where they want all these plans to come to the people.
Their famous title, "You will own nothing and you will be happy."
You won't own the cash in your wallet. You won't own the car. They're trying to turn everything into a subscription plan where you own nothing.
All right, this thing's being a pain in the neck here.
And what happens when you centralize the control of who prints the money, who controls the money? You put everything in one place. There is no checks and balances in the system. They choose whatever they want for their gain. They don't care about you. These CBDCs, which are being developed in every single country as we speak, only a few have rolled them out so far. We have China, we have Nigeria, and now we have.
They're trying to come to the U.S.
Well, the U.S. is in development right now.
Mm-hmm. They got Australia.
Australia's down.
Mm-hmm.
They're all over the place.
Right. In conclusion, the rich, when they have billions and billions of dollars, when they can buy quite literally anything they want, it comes to a point where it doesn't make them happy anymore to just keep buying all these things. It's just a day in the life. They want something more fulfilling. So what they want is to chase power.
Absolute control.
Now that I finally got this article up and running. Breaking Ethereum spot ETFs approved by the SEC.
Let's go.
About dang time. Gary Gensler clutched up for us this time. The reason why this is so important, Ethereum ETFs are expected to attract billions in institutional capital. As we noted in our last podcast, spot ETFs, they attract the entire stock world to start investing in a crypto in the form of a share of a stock because the share is backed by the crypto.
When you buy a share, they have to physically go on the blockchain and buy the underlying asset. Now think when retirement funds they start auto depositing into these assets. This is perpetual buy pressure on Ethereum and Bitcoin as of right now. This will prop up the price as it does with many stocks today. Inflows automatically going in. People not even looking at what they're buying. It's just being put in dollar cost averaged over time.
We've already seen how well the spot Bitcoin ETF performed. You got the large companies like JP Morgan, BlackRock, Fidelity, the biggest companies. They're disclosing their Bitcoin holdings in spot ETF. Millions of dollars. It's huge. There's so much money flowing into crypto, and it's right in front of us. We need to take advantage of this point in time to build your future and secure your financial success. Additionally, Hong Kong is allowing staking for Ethereum ETFs. Now, back in April, they already approved the Ethereum spot ETF. Now they're allowing for the staking of Ethereum ETFs. This is going to be huge. Great news for the crypto world. Additionally, most of you guys have already seen the Ethereum candle in one day. Let me take a look. Fuck it. 20% increase. 20% increase in just 2 days. That is beautiful. Now, this was a few days ago, so this was prior to the actual SEC announcement of approving the spot ETFs. But crypto's back, baby. What can I say? All right. on our Instagram at cryptoadvantage_, we posted an opportunity for those that follow us to post any questions that they may have relating to cryptocurrency, stating that we are going to actually answer them on the live.
Thank you to everyone that submitted questions, by the way.
Absolutely. So, Chris, what do you think Ethereum will hit peak bull run?
So I believe Ethereum can easily go past 10K. With the before mentioned inflows from the ETF, as well as just the expansion of global liquidity and all the buying that's going to be happening, could very easily go up a 2x, 3x.
And with our current stage in the market cycle that we explained earlier, we're just getting started. More than confident that it could hit 10K. Do we know the top? Nobody knows the top, but we're fairly confident that it could easily surpass 10K in this upcoming run. Why won't Bitcoin exceed 21 million supply?
So Bitcoin won't exceed 21 million supply because we don't want to become the next US dollar. We don't want to continually inflate and print more and more Bitcoin. What's that going to do to the price? That will undermine the fundamentals of Bitcoin as we know it. Now, the 21 million itself isn't all that important. It was the number decided by Satoshi. But the fact that it will never change is what gives people the confidence to continually invest in crypto and that it will continue to go up and secure their money, their long-term investments.
It's forever going to be a store of value.
Store of value.
Beautiful. What exchange do you use to leverage trade?
So leverage trading, or what might be more familiar as buying on margin in the stock world. It is when you use collateral to borrow and trade more than what you have. Now, being in the United States, our centralized options are pretty limited. But in decentralized apps, we have two notable examples. We have GMX, which looks more like your normal average exchange. You set your leverage point, you put down collateral, and it's a futures perpetuals exchange. Now, you do have to watch out for a liquidation point, because if your collateral, the amount you owe is more than the collateral, then it will wipe your position out. And you also have to watch the fees, because there's the funding rate and the actual exchange fees that they need to run the platform. Now, the other option is TLX. TLX is another decentralized app in which it has leveraged tokens you can go ahead and purchase. Now, this works by you either put Bitcoin, Ethereum, you give them synthetic USD or SUSD. They go ahead and purchase the asset, and then they put it into a lending pool. They borrow out, lend again, borrow out, all underneath within the code. And then you can get they currently support 1x, 2x, and 5x. And this will give you advanced price action. Now, if you're in a 2x token and Bitcoin goes up 10%, you're seeing 20%. That is some real gains right there. And
I would say so.
TLX, it automatically rebalances so the leverage stays at that target, meaning it does not liquidate. The only thing you have to watch is volatility decay, in which every time it rebalances, the fees, your token will decay value over time. So in choppy markets, you don't want to be in these tokens. But when we're going up, they are an amazing place to be. So make sure you're managing your risk properly and you know how these things work before you dump all your money into it.
Always be careful with leverage. How did Ethereum get created? I actually have a very interesting video that can really put it into perspective.
In 2010, Vitalik was a 16-year-old WoW fanatic, finding solace in the game's virtual world. But when a game update stripped him of his power, Vitalik's eyes were open to the injustices of centralized control. Introduced to Bitcoin by his father, Vitalik's skepticism turned to fascination as he discovered the potential of decentralized systems. Vitalik's journey into cryptocurrency was hampered by financial barriers, yet his passion led him to write about Bitcoin for Bitcoin Weekly. In 2013, Vitalik dropped the Ethereum white paper, envisioning a decentralized platform beyond Bitcoin's limits. With a team of pioneers, Ethereum's journey began. In January 2014, an initial coin offering raised $18 million. Ethereum started at about $2 in 2015. Curious about what happened to Ethereum after its launch? Watch the full video to discover its remarkable journey and impact.
There we go. G. Vitalik, this guy's brain is the size of Mars.
Absolute genius.
I mean, to absolutely create Ethereum, which is now gaining the attention of the entire globe, is absolutely incredible. This guy is a superpower. But it's quite interesting that he began working for Bitcoin and then he decided, I'm going to become an entrepreneur. I'm going to move over to my own project. And then goes on to have created a coin that has the second highest market cap in the history of crypto.
Plus the ability to do whatever. You can code whatever you imagine into Ethereum. Cue the decentralized apps that you see. You could even create games on the blockchain itself.
What crypto do you hold currently? That's a great question. However, we will not publicly disclose the cryptos that we are holding and how much we are allocating. However, if you join the Crypto Command Center, we disclose monthly our crypto holdings, what cryptos we're holding, and how much of our portfolio is being allocated towards each. We're also going to disclose how much leverage we're using and what percent allocation of the tokens are leveraged versus non-leveraged. If you want to join the Crypto Command Center, shoot us a DM on Instagram at cryptoadvantage_, and we will get you started. So, right. That is it that we have today. Crypto Conquest, Episode 2, Ethereum Explosion. Thank you guys for tuning in. I want you to follow our socials so you will stay updated with the top crypto news and finance news and mastery and advanced tips. And last but not least, don't be a laggard. Nobody wants to be a laggard.
You guys aren't grandmas, are you?
The amount of FOMO that laggards usually experience, don't be that guy. DM us, CCC, Crypto Command Center, and we will get you started.